Financial accounting. We're talking about contributed capital, which is the first chapter where we really focus on the corporation. So let's take a look at the characteristics of a corporation and the advantages and disadvantages of a corporation. In short exercise 2, they list 6 different items and ask you if it's an advantage or a disadvantage. The first one is ease of transfer of ownership. And this is an advantage of a corporation because, remember, a corporation's ownership is evidenced by shares of stock. And that's common stock or preferred stock. So all you have to do is buy and sell the shares of stock, and so it's very easy to transfer corporate ownership. Taxation. Taxation is not an advantage of a corporation, and the reason is this. If a corporation makes profits, they're taxed to the corporation. If the corporation then decides to pay dividends to its stockholders, in other words, share the profits, the individuals who receive those dividends get taxed again on those dividends. So in other words, corporate earnings has the ability to be taxed twice, once at the corporate level on the corporate tax return and once on the individual level as dividend income. So that's not an advantage. Number 3, separate legal entity. A corporation is its own person, so to speak. So it enters into contracts as a corporation. It can break contracts. It can enter into transactions, but it's separate and apart from its owners. And this can be an advantage or it could be a disadvantage depending on your perspective. Let's see, the 4th one says lack of mutual agency. And this is the same kind of thing. Agency, mutual agency, says that you can act on behalf of others. So if I am an individual and I get married, I can basically act either on my individual behalf or on the marriage's behalf. So that's mutual agency. We share the pluses and minuses of the other individual. When I'm a corporation cannot act on behalf of its individual shareholders. Likewise, individual shareholders cannot tell the corporation what to do. They're 2 separate and distinct legal entities. So their agency is theirs alone. Number 5 says government regulation. Well, yes, a corporation is regulated by a lot of government regulations. Specifically, the Securities and Exchange Commission pays particular attention to publicly traded corporations. So government regulation, because there's a lot of extra rules for a corporation, because we don't want corporations to mislead or mistreat the financial markets or their individual shareholders, that would be called a disadvantage. 6, continuous existence. And yes, a corporation can exist and go on and on and on as long as those shares of stock are traded between willing buyers and sellers, in other words, owners of that corporation. This contrasts with a partnership, which basically stops or goes out of existence every single time a partner dies or wants out. The partnership has to dissolve and then be reformed again, kind of like a marriage. So continuous existence is an advantage of a corporation. Now, what are some other things? Well, there's centralized authority and responsibility. In other words, you know by the chart of accounts who's responsible and accountable for what area of the corporation. Also, there's ease of capital generation. All you have to do is go out there and sell stock or borrow on behalf of the corporation. That can be a nice thing, but again, if the corporation has no assets or resources, many times businesses, especially if you go out and try to borrow money, will ask for some sort of collateral or a signature by the stockholders as well as the corporation. But that doesn't happen as much once the corporation has some resources. So those are some of the advantages and disadvantages of being a corporation.